Hi, everyone. David and I wanted to thank you for joining us for the market update for the month of May. Hopefully, you guys have all been out there and enjoying some of this absolutely fantastic sunshine we've been having. David, how did the investment markets perform in the month of May?
Overall, May was a pretty good month for equity markets. In the United States, we saw the S&P 500 up a little over 0.5%. For Canadian investors investing Canadian dollars in U.S. stocks, though, with the currency exchange, the loonie did really well in that month. So actually, equity performance for Canadian investors investing in U.S. stocks was slightly negative, even though the equity markets in the States were up in its own currency. In Canada, equity markets did really well again. The S&P TSX was up almost 4%, led once again by energy in particular, as well as materials and financials all did pretty well too. In Europe, in Europe and Asia, we saw pretty good performance as well. MSCI EFI index, which is Europe and Asia, was up almost 3%. So overall, pretty good month in the month of May. Harry, why have Canadian equities and the loonie done so well lately?
Yeah, that's a great question, David. I mean, most of us know Canada's really a two-trick pony. We have fantastic financial institutions, and we're also a country that produces a lot of commodities with our resources. So let's take a look at the first one. The banks tend to be very, very steady almost all the time. But what is really driving us right now are commodities. So with all this money that's been pouring in, countries are really starting to put in infrastructure, do a lot of things with that money, which of course need resources. So what's good for the Canadian dollar has been the increase in the worldwide need of resources. Hence, that's been driving it. I mean, you look at oil, you look at copper, you look at lumber. There's huge increases in all of these things, which again has helped the Canadian dollar out. And the banks, which of course lend money to all of these different commodity producing companies, also benefit from the same cycle we're seeing going on right now. We've also got a little bit of a tailwind that's helped our dollar because of the resources coming up. Again, that's pushed the Canadian dollar up. But we're seeing a second help in the Canadian dollar. Because things have been going so well inside of Canada, we've already announced and are slowing down our tapering program, so our purchasing of debt, as well as the Bank of Canada has let us all know that, hey, you know what? We're probably going to have to start raising interest rates a little earlier than what we thought. Mm-hmm. Yet if we look at our brother or sister, however you want to look at it, down south, they've come out and said, you know what, we're not yet quite going to be raising our interest rates up there. So again, they're going to stick with their plan. So their interest rates are going to clearly be risen a little bit later than ours in Canada, which again is helping the Canadian dollar. David, what has the recent strong performance of the loonie meant for our clients' investments?
That's a great question, Harry. Because the vast majority of our client accounts and portfolios are invested and overweight to U.S. stocks and international stocks as compared to Canadian stocks, the soaring loonie in the past 6 months has been a bit of a headwind to performance, generally speaking. And the reason being is, as Canadian investors investing Canadian dollars in portfolios that are predominantly investing in U.S. stocks and international stocks, where those stocks are obviously denominated in U.S. dollars or euros or Japanese yen or Swiss francs, whatever it may be. When the Canadian dollar is appreciating versus a large basket of currencies, even though the stock prices of those companies, like say it's Microsoft, which is a U.S. company and U.S. dollars, even though Microsoft's stock may be flat, when the Canadian dollar is increasing in value, that actually is a negative drag on the portfolio. So it has been a bit of a headwind generally for most client portfolios for sure in the past 6 months. But we've also seen in periods like in March 2020 of last year is a great example, the most recent significant downturn in the stock markets. It actually really helped a lot of client portfolios. It blunted a lot of that negativity because at that point in time, the Canadian dollar depreciated versus the euro and the US dollar. And so when your portfolio is invested predominantly in those types of stocks, it actually helps to blunt the impact of sell-offs. So And again, I don't think we're going to change our strategy at all just because it's been a little bit of a headwind the last 6 months. We still prefer to have most of our client portfolios overweight to US stocks and international stocks for a couple of reasons. The first being, most of the best companies in the world are not headquartered in Canada. As Harry said, we've got definitely some good companies. Our banks are quite attractive relative to international peers still. But a lot of the best technology companies in the world, a lot of the best healthcare companies in the world, a lot of the best industrial companies in the world are not headquartered in Canada. And so a lot of the best investment opportunities are still global. So that's why we prefer to have portfolios that are obviously invested much more globally. The second reason too, as I've sort of alluded to, is as Canadian investors investing in these foreign stocks predominantly, when we do have market sell-offs like 2020, the pandemic, like back in the financial crisis in 2008, if you're a Canadian investor investing mostly in US stocks and international stocks, you do benefit from the blunting of the sell-off shock. And so if, in 2008, if the US stock market's down 45% in US dollar terms, but the loonie's falling, you might not be down 45%. You might only be down 20. And so that has, in past sell-offs, been a massive benefit to Canadian investors to sort of shelter them from the shocks of those sell-offs. So that's another reason why, over long periods of time, we do like to be globally diversified as well.
Yeah, David, that's great information. As always, if you have any questions, anything that you want to review or need answered, please don't hesitate to give David or myself a call.
Take care, guys.
Bye-bye.